watching India market close. Now, if I had told you at the start of the day that you would see a TCS 7% up, you would have not believed me. But that's exactly what we're seeing today. And that's why I'm starting the show talking about TCS and not even the Nifty, because this really is the story of the day. The Indian IT behemoth has posted Q1 results slightly better than expected. They've been conservative in their guidance. The management has been conservative in their guidance. Most of their growth has come from India. But remember, the BFSI segment has turned positive for the first time in 5 quarters. That's possibly one of the biggest reasons why TCS is up 7%, and it is a tide that has lifted all boats. Let's come to the Nifty and the Sensex, completely roaring today. We'll get to all the details of the story, but first, let's go across to this exclusive interview on the occasion of India's first transshipment port coming to reality after the inauguration of the first vessel at Vizhinjam. We're speaking with Karan Adani. Listen in.
It was a historic day today for Kerala and also for Vizhinjam port, as its dream of 33 years has come to reality today, with the commercial operations starting today with the inauguration of the first phase of the Vizhinjam port. We have with us the Managing Director of Adani Ports and SEZ, who is also building this port along with the state government, to talk to us about the significance as well as the vision for the port going ahead. Welcome to NDTV, Mr. Adani.
Thank you.
So I would like to start with by asking about, what exactly is the significance of this port. This is the transshipment port, first port and the largest transshipment hub that India is creating. So going ahead, what is the relevance of this port for the country and also for the group?
I think, as you rightly said, it is a big day. This is country's first transshipment terminal, semi-automated as well as automated terminal. It is the deepest transshipment port in the country. And it is, apart from the infrastructure, it is a showcase from a technology perspective, because this is the port where we have implemented all the AIs, IoT, video analytics, all the kind of technology that we can think of to make the operation most efficient. And it is a very significant development, because as you know that most of the Indian cargo gets transshipped into other parts of the country, other parts of the world, other parts of the region. This gives us an opportunity to bring the cargo of Indian importer and exporters into the country and help in reducing the logistics cost, and in turn help in terms of help our manufacturing companies to be more competitive at the global scale.
If I can ask an additional question to this, with the operation of the first phase and then finally the second phase and third phase, what kind of impact you see? You spoke about the EXIM trade, benefits that might accrue to us. So have you all done any kind of calculation, the kind of benefit that India would get from this?
So we do expect at least 4 to 5% reduction in the logistics cost with having your own transshipment hub within the country.
Right. And you spoke about this being the largest, deepest natural harbor that we have. So with this, what kind of investments we are doing in this port, and what are the plans or the visions going ahead for this port?
So far, total investment between government of Kerala, government of India and APSEZ, total investment port is 8,800 crores. From that, APSEZ has put in 3,600 crores of capex. Going forward, once we get the environment clearance for the whole master plan, we would look at investing additional 20,000 crores by 28-29.
So this is over and above 8,000 crore, the additional 20,000. Yes. So total 28,000 crore total investment. And can you talk about the total capacity of this port in various phases?
So currently the capacity is 1 million TEUs, 1 million boxes. With efficiency we can take it up to 1.5 from the current phase. This 1.5 we will take up to 5 million boxes by 28-29.
28-29. So the final completion of the project is. So earlier I think it was planned to 3 million tons, which has now been increased to 5 million tons. Okay. And we are also closer. I mean, this is the closest port that we have to the international sea channel that we have. So what kind of strategic importance this port can hold for the country as such?
So as you rightly said, it is on the international trade route. This allows the largest ships to come in. It allows hub and spoke model for Indian ports to create and make Vizhinjam as a hub and distribute from here to all the other ports. A lot of value addition which can happen with transshipment. It's not just about transshipment, but what more value addition from a manufacturing perspective we can create over here. And that is what we are looking at, and as I said, that we were looking at reducing the logistics cost for our customers and also reducing the transit time, because you don't have to now move into any other international other international location for transshipment.
So earlier it used, I read somewhere that it used to take almost 1 month also at some of the transshipment hubs before the products are delivered. So with these kind of transshipment hub, that time period can be reduced by how much?
By almost 30 to 40%.
30 to 40%. Okay, you are also expanding globally, in terms of ports. You all have done a lot of acquisition in Israel, South Africa, Australia. We already have.
South Africa, East Africa.
Sorry, East Africa. Then we also have in Sri Lanka. So, what are our acquisition plans going ahead? Would you be looking at strategic locations, or you are open to other locations?
No, so we are more focused on Southeast Asia and East Africa and Middle East. So and obviously Bay of Bengal. So Bangladesh and this is the region that we are focused on. Basically, looking at countries which are of has a high manufacturing base, or look at countries which have high consumption. And basically, the idea is that from a trade perspective, how do you make Indian ports as the hub and supply from the Indian ports into all of these countries?
Would it make sense to look at ports even in, say, Latin American countries?
Not as of this.
Not as. So one last question on group's total capacity, the kind of capacities you all are looking at in the short term as well as in the long term, say between 2025 to 2030. What is our plan going ahead?
So our plan is by 2030 we want to be handling 1 billion ton of cargo. That's our aspiration. From that, roughly 900 million tons will come out of India. And as the country, if country reaches the $5 trillion mark, I think we would achieve that goal, because we are indirect beneficiaries of the country growing. And so we would look at expanding our capacities across all our 14 ports and look at giving better service to our customers.
So Vadhavan port is what government has announced recently that they will be coming up, So would you be looking at participating in those terminals also, or bidding out?
We keep evaluating all possibilities on PPP mode which are available, and we would definitely look at.
Thank you very much for talking to NDTV.
Thank you.
Thanks.
Thank you.
That was Karan Adani, Managing Director of Adani Ports and SEZ, talking about the inauguration of the Vizhinjam port and the docking of the mothership there. Of course, we'll give you more details on this on our special coverage at 6 p.m. this evening, so stay tuned for that. But right now, the focus is on what's happening in the markets, and it's truly astonishing. Let's just pull up that heat map for you, just to give you a sense of what's working this afternoon on the Nifty, and it's all about IT. I mean, TCS has been the stellar show. Undoubtedly, naysayers have completely been proven incorrect, and you can see that wave across the IT pack. So TCS, Wipro up 6%. For what? The numbers have not even come, but Wipro up, LTI Mindtree, Infosys up 4%, HCLTech, Tech Mahindra. I mean, this is the tide that has all boats lifting. So that's really the only story this morning. Maruti continues to suffer, as does Divi's. But really, all of the market in positive territory, about 1% up in the Nifty, comfortably above 24,500. So hey, another day, another milestone there. The Sensex now off its highs of the day, was up 900 points someday. But Hersh, I would reckon that really is an IT story, because that kind of excitement not seen in the broader markets consistently. Yes, a few winners here and there, but not this kind of euphoria if I cut out IT and Midcap IT from the space.
Absolutely, Tamanna. It's completely an IT-driven day. Of course, some bit of positive commentary, some bit of positive sentiment as well with regard to the numbers. But largely otherwise was an inline set, to be very, very frank. And despite that, the reaction has been extremely strong. Now, whether it is global factors leading to this, with possible rate cuts on the anvil, with the fact that US inflation is now at just slightly below the expected 3.1%. That's what the number came in at. Or whether it's the kind of commentary that TCS came out with in terms of the positivity they demonstrated, making it seem, or at least give a flavor, that possibly that the bottom has been made when it comes to the IT headwinds that we've seen over the last 6 odd quarters. So maybe a combination of both of those really driving markets.
No, so I just wanted to point out the mid-cap and smaller IT companies as well, Hersh, and let me quickly do that because look at the story there. It's not just about TCS. A Coforge today is up 8% plus, 8.5%. You were speaking about Sonata Software just a few minutes ago, and look at what's happening there. An emphasis, a persistent. And here's where the question comes. Are we talking about mid-cap IT superseding the main line over time? And we'll get you more views on that. I just want to play out what Girish Pai also told us this morning, and let me see if we can pull up that bite. Why the excitement about TCS? Why are we really seeing this kind of an up move? And we started our interview with Girish Pai of BOB Capital, who analyzes the space very closely. We asked him about his view on an Infosys and a TCS. Listen into what he said.
I think if you look at tier 1 and tier 2 valuations, I think both are at a premium to what they've been trading at over the last 5 years or even 10 years. Within 10 years, they are like significantly higher premium that both tier 1 and tier 2 collectively are trading at, more so tier 2. So I would say that consensus is already building in a fairly strong growth in FY26, and the valuations, if you look at on the basis of FY26, I would think that growth is already factored in, and probably it's at a premium right now, unless there is a big surprise there, which I think is highly unlikely, the way I see it. And in tier 2, so tier 1, I think the challenge is the growth part. So you saw a couple of years of very strong growth driven by what people call compressed transformation. We're talking second half of 2022, maybe the full calendar year of 2022. We saw extremely strong growth for the sector, which is probably like 3x the normal trend growth of the sector, so to speak. And I'm talking Indian IT services sector. Which I think is probably normalizing, and once we get through the FY26 spike, which is probably pent-up demand driven, you will probably see growth back to that 6-7% kind of level for the tier 1 companies. Tier 2 companies will definitely grow faster because of the lower base, but I think from a multiple standpoint, they are at a significant premium to the tier 1 companies. I don't think the earnings growth gap that existed between tier 2 and tier 1, which has been the case, which is pretty significant in the last 2-3 years, is going to sustain going forward.
All right. So that's one viewpoint coming through. Of course, we'll continue to have a whole host of views when it comes to IT. But first off, let's hear it straight from the horse's mouth. TCS Q1 numbers largely were in line with estimates. K. Krithivasan, CEO and Managing Director of TCS, earlier spoke to NDTV Profit, and he suggested that FY25 is going to be better than FY24. And he spoke with Sajit Mangat, of course, and Sajit asked him about both growth projections as well as plans going forward, even with regard to margins. So listen into a slice of that.
We keep tracking the kind of projects that we do, the kind of customer confidence in what they want to do, and what kind of projects get reprioritized. We still find some amount of volatility there. And we also seen instances where some of the projects have been paused at a shorter notice. So when that tendency reduces, right, when projects don't get paused at a shorter notice, or when reevaluation of long-standing project comes down, it will give us more confidence. But currently, customers continue to be evaluating projects, looking at which is the right place to invest. So as long as that investment with a stricter scrutiny continues at the same level, we have to be cautious. On a sequential growth basis, North America BFSI did better than what it did before. So to that extent, we are at least reasonably confident that that kind of growth can continue. It's a question of how much we are able to accelerate that growth. And even if you look at our TCV is, I don't think as a proportion of TCV it changed. And also, you don't look into the TCV on a quarterly basis because there is a inherent lumpiness, like which deal gets closed at what time. So that you have to look at over a period of 4 quarters to see whether there is any significant change. But we are confident about our BFSI. I would say we are playing on the front foot there. We are training almost all our associates to be generative AI ready. We created what we call an experience zone, where people can get in-depth expertise in these technologies. 3, then we announced Wisdom Next. Wisdom Next is a platform that helps our customers in adopting generative AI faster. Then we are also doing a couple of initiatives internally, like where you can do greenfield projects efficiently using generative AI. Then our industry groups are working with our customers in identifying use cases in the entire value chain, where generative AI can bring in better products and services, so that there is otherwise if you look at only from a software engineering perspective, it's productivity again. But you need to also see on the business outcome where you can increase the revenue and value for the customer satisfaction. We are working on those use cases as well. So we are quite deeply engaged with our customers. As we mentioned yesterday, we are close to having about 1.5 billion in terms of pipeline and about 270 programs that we are doing today.
Also aspiring for a 26 to 28% kind of margin number, that does not change. Of course, they are some way away from that. Also, with regard to cost optimization, at least subcontractor costs, it seems, has bottomed, is what he was suggesting as part of that interview with him. So, but nonetheless, he suggested that several levers to get that margin number from 24.7 currently to the 26 to 28 band. That's where they really aspire to be. Gen AI, of course, the big talking point for IT going forward over the next maybe 5-6 quarters will be who will be the winners in Gen AI and whether we're getting answers to that. But let me quickly welcome on board Aditya Arora from Adelytech.in to talk to us about exactly this. Aditya, tell us, what's your sense with regard to IT now on charts? We've seen nice little bounce in IT. Where to from here in your view? We are at life highs.
Very good afternoon to you and to everyone. Look, we are seeing a catch-up rally in Nifty IT. We are already seeing a stellar show in NASDAQ, and the kind of rally which we have seen in NASDAQ year to date. And we were already hearing about how NVIDIA delivered stellar returns, whereas in India, we hardly saw any outperformance. In fact, there's still a lot of divergence in terms of performance. So there's more steam left. But eventually, I think this is just a catch-up trade. I don't see a scope of stellar rally over here, but a catch-up trade which is happening over here. So at this point in time, I think the risk to reward is good. Long way to go, but one shouldn't extrapolate this to multi-month and multi-year view, because this is just a catch-up trade, and fundamentals also are not such that it seems like a sunrise kind of a sector or a rally. So one can play this trade wherein one can go long on Nifty IT stocks. The scenario looks pretty good as of now.
All right. Thanks for that, Aditya. Time to slip into a short break. Of course, plenty to chat about on IT. Thanks for that quick viewpoint. But we'll delve deeper into IT as well as other market movers on the other side of this very short break. Stay tuned.
while it's all about IT today, banks are not doing too shabbily as well, and you're seeing the indices, the key indices, definitely on a strong wicket. What should be your top picks in the market right now? Aditya Arora, Adlytick.in is with us. Aditya, let's talk about your top picks.
Sure. So my top pick includes Atul Limited, which is from Chemical Pack. There's fantastic trade playing out right now in the market. Buy the undervalued ones and sell the overvalued stocks. So definitely chemical comes under the category of those sectors which are pretty much undervalued or are trading at mean valuation. So this looks good technically also at 7,000. Stop loss is 6,500 and target is 7,500 to 7,900. And the second one is from the cement pack Dalmia Bharat, which looks good at 1930. Stop loss is 1840 and target is 2020 and 2100.
Thanks for that, Aditya. Let me, Aditya, switch it back to IT because that's essentially the one sector which is largely in focus. Tell me, mid-cap, large cap, what's the sense now, given the kind of rally we've seen today?
I think mid-caps are better when a fresh leg of rally starts. Mid-cap deliver high beta moves and they give more alpha. So that looks good, and I also like one of the stock in this space, that is Coforge, which is one of the top gainers today. And actually, if Coforge started the rally, it was one of the initial movers. So that looks good at even current market price of 6,016. One must keep stop loss at 6680 and target should be 6,400 to 6,700.
Okay, so Coforge, you'd say, would be your top pick in mid-cap IT. Aditya, what about HCLTech? I'm asking about HCLTech because the numbers are due later today. Just a quick call on what would be a strategic play on HCLTech.
I think HCLTech also looks technically good, but there are various perspectives to this IT rally. One I talked about is a catch-up trade which is happening in IT stocks. Technically, these stocks have given a breakout. And the third one would be a negative thing, which is, yesterday NASDAQ corrected 2.5%. So there could be a negative spillover somewhere down the line. But if we take 1 to 2 month point of view, then I think mostly 2 out of 3 factors are pointing towards the positive side, and hence one should, take a positive stand on HCLTech and even the larger IT stocks.
To be clear, you would buy HCLTech right now at 1561?
Yeah, but I would be a buyer, not as a, considering as a BTSC trade because anything could happen in the result. But if we take 1 to 2 month view, then I think yes, 5 to 10% upside is there in this counter.
Okay. HCLTech in focus because it's set to post its quarterly earnings today. Rucha is joining us, on what could be expected from HCLTech. Yes, Rucha?
Yes, you're right. HCLTech is set to report its results right now after 3:30, of course, but it likely will be a laggard amongst all its other peers. Let me talk to you about the numbers. Now, revenue is expected to fall around 1.6%. EBIT may also fall around 4.1% to a 17% of margin versus 17.6% of margin in the last quarter. Net profit is also expected to fall around 3.5%. Now, all of this is because of the seasonal headwinds which the company might face, and also because of shoring of a large deal that can impact the margins as well. Now, if we talk about the first quarter expectations from brokerage houses, most of the brokerage houses actually all of the brokerage houses expect a negative growth, while the average is around 1.9%. Talking about the margins likely to remain around 17%, as I rightly mentioned. Talking about guidance, now this is the major thing to watch out for. The company had guided for for a 3 to 5% of constant currency revenue growth, and most of the brokerage houses believe that the company will maintain this guidance, except JP Morgan, which expects HCLTech to slightly uptick its revenue guidance to around 4 to 5%. Talking about the margin guidance, the company had guided for 18 to 19% of a margin guidance. Again, most of the brokerage houses expect HCL Technologies to maintain this kind of guidance. Now, key things to watch out for is, of course, the FY25 revenue guidance and also the discretionary demand trend, which TCS today mentioned that demand is likely the same, but FY25 is going to be better than FY21. So what is HCL Technologies talking about the demand is another thing to be watched out for. The growth in ER&D space, specifically for HCL Technologies, is again on the radar of investors. And of course, the generative AI, whether such kind of deals are being converted into revenue or not, is another point to be watched out for.
All right. So of course, HCL Tech in focus, but tech as a stack is up. So 3% higher on HCL Tech. Aditya, your views with regard to HCL Tech, I think we've kind of covered. So thanks for that. But if we can also try and shift focus on the other earnings candidate, we have something like an IREDA, which will also declare numbers. Just talk to us, because this one is up and away in trade. If you can pull up the chart, I believe it's buzzing as well today, and yesterday it was up nearly 13% at close. So Aditya, talk to us about this one on charts. What's your view?
Right. So we have seen stellar move in IREDA since the time it has listed, and more so in the recent times post the election dip. The stock was trading at 155 and the stock is trading at 300. So right now in the short term, stock has seen parabolic rally, and no one should chase the stock at current market price very aggressively, because the rally has already played out, and I don't think there's much margin of safety if somebody is playing a short term rally in this. So I would say avoid this counter at current market price, because a lot of good news is in the price. It has been discounted and stock is now facing stiff resistance at Fibonacci numbers of 300 to 310, which is the supply zone for the stock. Until and unless 310 is not taken out decisively and on closing basis, one shouldn't chase this counter, because there's scope for some correction or some time correction.
Aditya, you also have a KPIT Tech, top gainer on the Nifty Midcap, maybe second top post Coforge, 11% now. What's your sense with regard to charts on this one?
The charts are good in KPIT Tech, but I would be a buyer if it corrects to little lower levels. Like currently the demand zone for the stock is placed at 1800 kind of levels. So if the stock is available at 1800 kind of levels, then I think the risk reward would be pretty good to go long on KPIT Tech.
Got it. Aditya, I just want to try and cover one last stock before we move on. We've got Z Entertainment up 6.5%. Of course, some fundraise on the fundamental side of things. But how is this looking on charts? It's been a tricky one, right, through this rally.
Yeah, it has been a tricky one, and a lot of times the stock traps people on either side of the move. But more or so, the stock has bottomed out if you look at some medium-term charts. And the kind of significant correction which we have seen from 300 odd levels to 126, significant price destruction over here. But now, after a good consolidation and base formation, this stock is preparing for a fresh leg of rally. So I'm pretty positive and constructive on this counter. One can even buy at current market price of 156, place stop loss at 145, and target should be 166 to 179.
All right. So, okay, Z Entertainment on the news of that fundraise on Tuesday. But, like Aditya said, this is one of those tricky ones. You could get caught on the wrong side of that trade. So what should be your BT, ST, BT, or actually for Monday? Your setup for Monday. We'll talk about that when we come back after the break. We'll also be speaking with Gurmeet Chadda. We're going to focus on some of the other spaces in the market which are buzzing and some which are underperforming. All of that when we come back. Stay tuned. been talking about IT, we've been talking about the winners. Let me just point out a few more sectors which are working and one that is not. So the ones which are working, let's pull up a fact. Let's pull up an RCF. Fertilizer stocks are buzzing once again in trade today, so that's been interesting. Let's look at some of these counters, about 5% up, 4 and 5% up on both of them. I want to look at what's happening with Railtel, Ircon. Once again, you have a situation where rail stocks are a buzz. Orient Rail had a big order. Railtel is 16% up today in trade. IRFC is something that we should look at as well. So these are some of those spaces which are really working. Now, what's not working, the laggards are the realty stocks. And we'll start by talking about Prestige. Their business updates for Q1 were not too heartening. The Nifty realty is the worst performing index for the second session in a row. I would say Prestige has actually recovered slightly from its day's lows, but Macrotech, Phoenix, all of them are hurting. Now, what's going on there? Because we've been seeing business updates so far, but the data as of now is pointing to a possibly weaker quarter. Is that how you're looking at it, Anushi? Anushi joining us for more on what's happening with realty.
Hey Tamanna, so I've picked out a couple of stocks in the real estate space, and just to give you an outlook on all of the business updates, it's kind of a mixed picture building up over here. So if I look at Puravankara and Prestige, which released today, if I'm looking at Puravankara, the pre-sales remained flat, about 1,128 crore of pre-sales. Now this was on the account of some delayed launches which will now happen in Q2 FY25. But if I look at the collection picture, collections remained on the stronger side, 39% growth, while the price realization also, as the other real estate players, continued on an uptrend. Again, Prestige Estates were one where we are seeing this pain coming in terms of their pre-sales number. They were about 22% down at about 3,030 crore, but do note that the Prestige numbers are also built on a higher base case scenario. Average realization was about 16% up, and the collections remained on the 6% up. But if we are to look at what are the today's laggards in terms, Macrotech is the one where we are seeing it pulling the index down considerably, but overall Macrotech reported decent in-line numbers, 28% of pre-sales growth guidance that they continue to point out at. Collections remain 12% higher, but I also want to talk about some of the smaller plays. In fact, while we've talked about a mixed set of a scenario, we also point out to the good ones in the batch. So Ajmera Realty saw about 36% of growth in its pre-sales numbers, while its collections were about 49% higher. Again, they have guided about FY25 guidance at about 1,350 crore, and they've clocked in about 306 crore of pre-sales in this quarter. And last one on the list is Signature Global. Again, they have continued to remain on a strong momentum, 255% growth in their bookings. That's a pre-sale number, and their net debt has also increased significantly. If you look at the collections, again a 102% of an upside. But you know what is interesting? It's just not the one-day scenario where we are seeing Nifty Realty coming out as a loser. If you go to the 1 day, 5 day, or even a 1 month scenario, most of the bigger real estate players are in fact seeing some pressure in their stock price movement and have been down considerably. So this is the overall picture that is looking in the Nifty Realty so far. A mixed set of business updates coming in, and good ones also on the other side.
Yeah, thank you for that, Anushi. So reality one to watch out for this Q1. All right, Gurmeet Chadda of Complete Circle is joining us now. Gurmeet, a very good afternoon to you. I believe you have braved the rains, delayed flights, traffic, somehow made it to BKC and joined us on the show. So
thank you.
So first of all, congratulations for making it despite all that. And now let's start with, I think, the biggest talking point. At the risk of repetition, I can't but help start by asking you about what is happening with TCS. Do you think the 7% uptick is justified any which way? Yes, the Q1 numbers have beaten most estimates, but not to that extent, one would argue.
No, I think the cycles have shortened. We should not read too much into daily movements sometimes. IT has been subdued. And when you are in a bull market and valuations get stretched, market starts looking for pockets where, there is some kind of, I don't say there is a lot of valuation comfort in IT, but, something which is more subdued. We saw that with banks a couple of weeks back. We saw that in pharma in the month of June. So it's basically that, you're hunting for pockets. It started happening a bit in, chemicals also. But still, you're going towards that, tells you that there's a little bit of fatigue in terms of taking market higher. I think what impressed market with TCS was that, if you see vertical wise, while Q and Q almost 2% in dollar terms, I think vertical wise, manufacturing energy showed traction. They made a comment on AI and generative AI picking pace, but broader commentary from whatever people we speak to in tech is that the projects are more coming on cost optimization, rather than on big tech, transformative, discretionary spending. I think that will take time. Probably once the rate cut happens, starts happening in US, the broader environment improves. But there is very little valuation comfort. Even HCL now, after the run up today, trades at 24 times. TCS is probably now closer to 30 times FY26 EPS. So I personally think valuations are factoring in any recovery which is there. Plus, I think a positive headcount addition after a few quarters maybe suggests that the demand environment in terms of, has bottomed out in terms of, the deals not happening. I think so. It's a bit of a catch-up trade, nothing much. I think should be over in a day or two.
Okay, so it's a catch-up phase. Now, Gurmeet, there could be a couple of reasons. TCS, of course, could be the trigger, the Q1 numbers. We're seeing what's happening in the US. The CPI numbers for June were very, very benign. 80% of those surveyed now think there's going to be a September rate cut. But my question is, does this really translate into any clear gains for the big three? If it's all about cost optimization, like you're saying, do you think that your midline IT companies are better placed for a run-up?
Don't agree. Even their valuations are very high. Tell me one good mid-cap IT which is less than 40, 50 times earnings, right? So, so I think look, we have KPIT in our portfolio, which is a specialized space, more a auto software play, auto embedded software play. One stock which hasn't done well post the euphoria around IPO is Tata Technology, which is more a digital engineering company and not just the tech part of it. I think that's something which probably could see some. It's a great ROI, very good business. And IPO from 500 went up to 1400, and now it's been at around 1000 odd levels for a while. So I think the platform and the software businesses is where Street is probably giving a higher valuation, whether it is KPIT, whether it is some of the niche names in IT spaces, and some of the platform businesses, which I call the new age IT businesses like the Zomatos of the world. So you got to differentiate a little bit. And as I said, on current earning from next 1 or 2 years, all the good news probably is in the price as far as even both mid and large cap IT go.
Got it, Gurmeet. Gurmeet, KPIT, possibly you seem constructive. I want your take because this one has been a 20 bagger in the last 5 years, and I'm taking COVID out of the equation here. So it's pre-COVID to date, 20x. What's the sense now? 80 around, I believe it's trading 80 plus times price to earnings, if I recall. But broadly, what's your sense at this point? Would that be is this a good entry point, given that overall IT in general is overvalued and therefore KPIT may stand out for you? Is that how you are reading this?
No, I don't think so. It's a from an entry point of view, looks a touch expensive. But what has happened with KPIT is given that 30% kind of growth, which has been elusive to IT for last 2 years. Of course, last 5 years also. If you see the EPS growth in last 2-3 years, it's been upwards of 30-35%. They did a very good acquisition. Then they almost work with almost 15-16 top labels in automotive space. One of the software they have is Aldo 4, which they say is probably 3-4 times safer than manual driving, which is auto driving. And they're very focused on CASE, which is connected, autonomous, shared electric, which is a very niche play within IT. And I think good companies which justify, I think market gives you that high multiple for consistency and continuously, demonstrating high growth, high TCVs, expansion of margins. So all three tick boxes for KPIT in terms of deal wins, in terms of margins, in terms of growth coming was there, and that's why it's got rewarded. And Tata Elxsi also initially got rewarded, and the moment the growth started tapering, we've seen almost 30% correction from the peak. So in these stocks, there is very little margin to go wrong. Once you enter somebody with 80-90 earning multiple, if it doesn't grow 30%, then you're in for, a decent correction. We've seen that with KPIT also, a lot of brokerage reports have come out. So, we are happy because we bought it around 500, 400 levels. So we made our money. But I don't think so incremental addition at this point would make too much sense.
And so Gurmeet, currently stand being stay away from IT. Just to clarify.
I'm neutral on it. I'm on neutral on IT, and as
Okay.
I said, I would be more focused on company specific and more biased towards software and platform businesses rather than pure IT services tech.
And just to kind of complete this theme, I want to try and understand the global picture, the macro from you. Now, just from a perspective, rates have gone up substantially globally. Do you expect to see a slowdown, stroke, even a recession in the US, which could likely prove to have downside risks to IT? Is what just that picture, if you can give us.
See, I think US data, some of it is very concerning. The interest payment is now the third largest payment in their balance sheet, which is $1 trillion. It's actually exceeded defense. Which is a worrying sign to me. Even the labor data, the job data is very confusing. I always say that US has a white collar recession. You have job losses at the top in the big techs and all, and lower down there is a shortage. And when you talk of the basic, there's a factory workers or people working in different stores. It's a very strange situation. A lot of the banks are sitting on, if you cumulatively add around $600 billion of mark-to-market losses because of yields inching up. So I think at some point of time, the rate cut has to happen. Street probably got a whiff of it yesterday with the CPI data coming in at around 3. And it's been around 3 now for almost, I think, 6, 7, 8 readings if I track. My sense is you could see a rate cut around September. I think that's what my sense. And I think possibly there's a very high chance of it happening before elections. We have to see whether there will be a shallow rate cut cycle or it will be more, just acknowledging that we have peaked out and we are starting a downward journey. But I think US economy does concern me. And that's the reason I'm saying I'm very neutral on IT for now.
So that's quite a fair bit of detail on IT, and Gurmeet is neutral on IT. But I just want to take a point you made and extend it, where you voiced concerns on valuations. Point well taken. But what part of this market can you extend that argument to and find something where valuations doesn't raise your eyebrows or have a big question mark, Gurmeet? And that's my question for you. Where do you look at those pockets of possibility?
So I think one pocket has been the energy space. If you look at, for example, let's say the likes of NTPC or Power Grid or some of the other PSU names in this space, you're still getting them at 16, 18 times earnings, 5% dividend yield, and they're demonstrating it. NTPC also has very good plans for next 3 to 5 years, including hiving off their, the renewable energy business. Power Grid with, all the peak power demand at 240, government taking initiatives to put solar panels, there'll be very strong demand. So in fact, the entire power value chain, which is, generators, transmission lines, transformers, insulators, I think I like that space. I think there's a sustainable, long, high, mid-teen growth in that sector. So the power generation itself probably will see 12, 13% growth. Government is also already talking of 400 gigawatts by 2027. So if you translate that, that's 12, 13%. So I think, and if you see Nifty Energy Index, that's at 16 times versus Nifty being at about 21 times. And historically, last 20 years, if you plot the return, that's actually beaten Nifty by 1.5%. So it's generated alpha over a long period from Nifty and is available at reasonable valuations. I like some selective FMCG consumer plays, with budget around the corner and rural economy, expected to show some uptake. So if you see there's hardly been any action in FMCG, if you just remove the Varun beverages and the turnaround stories like Imami, etc., it's been pretty flattish. So we like ITC, we like Tata Consumer in that space. Even Varun Beverage, I think, has more growth left. I think they should have a few very good quarters of earnings with the expansion of geographies and the spring drink, the energy drink. Third space is which we are selectively looking at is NBFCs. I think once the rate cut cycle starts, most of the NBFCs haven't participated, whether it is Bajaj Finance or Chola. Poonawalla has corrected 20% after that large block from 500 levels. Some of the good quality ones, strong promoter back, low cost of funds. Eventually, when the cost of funds comes off as tenure also recedes, would benefit. Because it hasn't done too well in last couple of years. It's difficult to put fresh money there, but I think the risk reward is pretty good there.
Spoke about a lot of spaces there, and one of them was FMCG. So let me just play out this interview from Godrej Consumer. GCPL has been buzzing, and it's launched its first ever indigenously developed mosquito molecule for its repellent products. Remember, its mosquito incense sticks had done really well, boosted up the stock as well. We caught up with Sudhir Sitapati, the CEO of Godrej Consumer Products today. Listen in.
Every decade or 15 years, the household insecticide category needs a new molecule because mosquitoes get a bit resistant to old molecules. So the last big innovation we had in this category was in 2008. So it's high time we need it, and this process takes a long time to change the molecule. So renofluthrin is the first big molecule in the last 15 years in India. I think what's special about it is it's a made in India molecule, developed, patented, designed in India, hopefully for international use. So that, of course, that doesn't matter from a consumer point of view, but it's certainly a matter of pride for us that we are innovating on new molecules and not just buying molecules from abroad. I think what we expect in this business is the last few years, this category has not grown very much, because a lot of illegal, efficacious but unsafe illegal molecules were getting imported into India. We hope that with this molecule coming in, that will stop and growths go back to double digit, which is where it should be in this category.
Definitely. And about the exclusive rights for this particular molecule, can you detail us about for how long it is and what kind of investments have gone into developing this?
See, investments, I can't give you an exact number, but lots of investment is required in developing the molecule, in testing it, because government regulations are quite stringent, and then, of course, in marketing it. We have, 6 to 8 years, we have exclusivity on this molecule.
And on the so there are definitely concerns around the rural demand recovery. So, and the earnings are just around the corner, and they have already companies have started reporting results. So, what are your expectations as of now?
I hope I think after COVID, there's definitely been softness in rural markets. Consumption has been soft, and it's been unusual. But I think it's cyclical. I think after COVID, a lot of people, saved a lot, consumed less, etc. I hope in the next few months we come out of it and we see better rural performance.
Definitely. And lastly, sir, what are your key expectations from the upcoming budget for the consumer sector?
I hope that the government gives stimulus to drive domestic consumption. Domestic consumption is a very important part of GDP because it's a measure of equality, because poor consume all their money, it's the rich who save, right? So if you have consumption not growing, it means the poor are not growing. So I hope the government stimulates consumption in the budget.
All right, so that's of course Godrej Consumer. Before I come to Gurmeet on the fundamentals as well as which pocket he likes, he's mentioned a few stocks, but I'll go more detailed on that one. Aditya, any FMCG names that you are liking? And do you believe that as a budget theme, it will be a good one?
I think Godrej Consumer looks good on the chart because it has been consolidating since a long while. And now it's ready for a fresh leg of rally. I think one can buy even at current market price of 1442. Stop loss should be 1380 and target would be 1500 to 1600. So complete FMCG basket looks good when a lot of pockets are pretty overvalued. Fresh money is flowing into FMCG basket, and most of the counters are outperforming the market. So I think overall, the sector looks good, index looks good, and Godrej Consumer is also poised for a fresh leg of rally.
Okay, interesting. Gurmeet, between staples, core FMCG, what exactly is it that you're liking? You've given us a couple of names which are more value names, something like an ITC, which has really done nothing over the last year or so. But just from a theme perspective, just give us some insights on that.
So as I said, I think they could be near-term beneficiaries, with market now chasing pockets which haven't done too well. I think budget would be a bit of a trigger. I think government will announce more SOPs in form of increased farm income support. It could be some more, MSPs. Anyways, hike has been one of the highest recently. We recently saw in Maharashtra state governments announcing more money, especially towards women. in the rural and the semi-urban areas. So I think you would see some uptick there happening. Godrej Consumer has done well with Mr. Senapati coming in. Leadership change has made a bit of a difference. The stock, if you already see, is up 35-40% in last 1 year versus some of the other names which have been pretty subdued. And I think one good thing is also the little focus on capital allocation. They are also expanding the category beyond the mosquito repellents where they are already market leaders and getting into better products even on personal care, BPC, which we call beauty and personal care, expanding distribution niche, building more SKUs there. So that's something, it's still at about 1.4, 1.5 lakh crore. I remember 5 years back it was 70,000 crore market cap. So I think it can do. It has the brand and the presence, provided this focus continues. And we have in our portfolio some stocks which are linked to the QSR network, like Mrs. Bector. We have Varun Beverage in our portfolio. We have Tata Consumer. We have a host of FMCG names, hopefully waiting for some recovery. And we will now, get into some, the home improvement names with some good plays in fast-moving electrical goods categories. I think that's something we would like to position once there is more support announced towards rural economy.
So consumption is one very, very clear theme as far as the budget is concerned, Gurmeet, and I suppose sector rotation will also help because you have to find pockets which haven't worked as well so far. But talking about budget, I mean, I just need to spend a minute talking about railways. Look at a Railtel, Ircon, all of them over the last 1 week or so, couple of weeks or so. No fresh trigger. I mean, I don't know if anything else is happening apart from budget. Of course, BlackRock's interest in Titagarh might have started off the whole, win. Is this something that you're staying miles away from, or you're willing to dip your toe in?
Markets can make you look stupid for a longer period of time. And that's what my learnings are, both in defense and railways. So we're not adding anything there, but also not, as I said, completely missing out. I think the stocks are just moving up on orders. We don't realize that a lot of these orders have long gestation period. So my sense is most of the good news is in the price and probably 80-90% of the universe. And I remember 2003-07, similar things used to happen in infrastructure and EPC names. Your Landcos, the GMR, the Punj Lloyds of the world. I'm not comparing that with PSUs. That's not the idea. But you can't value cyclical business as consumer businesses, which is what is happening right now. But there are few pockets, like Titagarh, for example, the growth path is probably 10 years. So maybe in some pockets, you can justify that kind of run up. Even in defense, I think there's a huge export opportunity, which is opening up both. So not only is India making more, there is a lot of import substitution. There's a big export opportunity in smaller countries, African countries, the places like Argentina, Armenia's of the world. So there is some sustainable long-term story there. But I think the 70-80% space looks extremely overvalued. And we could see either a time correction or a price correction or maybe both.
Okay, so that's the story with rail and defense. Just on the charts, anything there that you see in breakout mode, Aditya? Let's talk about Railtel today.
Okay, so I agree with Gurmeet ji that a lot of counters are pretty much overvalued, and on charts also they have seen parabolic rise. If we talk about Railtel, then post the election dip, the stock was trading at 337. Now it's trading at almost 600. So there's no point chasing these stocks aggressively at current market price because there's little margin of safety and little upside is left in these counters momentum wise. So I think perfectly buy on rumors, sell on news kind of theme is playing out over here. So very little time left to take chips off the table.
All right, Gurmeet, I also understand you have a position in HDFC Bank and we've not had a chance to speak to you post those quarterly updates. So my mandatory question, what's your take on the update itself? Degrowth on the loan book front, flat on the deposit growth front, a meek set of numbers, stock also taking a bit of a tanking post that. What's your sense?
in one word, disappointing. I think the market expects HDFC Bank, it's the leader to take, leadership position when it comes to, key metrics. I think probably the near-term focus of management is retiring the old deposits of HDFC, getting the liquidity and other ratios in place. And that is probably taking precedence. But of late, I've seen them also lose some market share in lab, in working capital. Lot of big ticket lenders, they're not as aggressive out they were. So I don't know. I mean, I don't understand. I'm not in a position to comment in terms of why it is more granulated. But I think probably it's got to do a bit with the leadership change also. Aditya Puri as a business manager was very different than the current leadership. So sometimes you have this comparison. But post merger, has been some value destruction. In fact, HDFC was at the same price pre-merger. If obviously you have to account for the cancellation of shares of the merger, but this hasn't really added much to the share. Last 3 year returns are pretty flattish. The market want to see the bank leading, like what ICICI is doing. In fact, on credit growth, on deposit mobilizations. I don't think so. Risk, as far as risk and asset quality is concerned, there's ever been an issue with HDFC. So you'll have to wait for the results. Let's see what they have to offer. I think the market is more interested in guidance than 1 or 2 quarter updates. Probably the market wants to now see the bottom, that, whatever adjustment has to happen, have happened, and probably, there are better days ahead.
So would you reconsider your position, if at all, Gurmeet? On HDFC? Is that, yeah.
We already have, as I said, about 3.5% in some old portfolios, around 4%, and it hasn't really helped in the last couple of years. But we also have positions in ICICI, Axis, Federal Bank, SBI, which has done well for us. So we play the basket. We usually don't get dependent on one particular stock. But we are very, very constructive on ICICI Bank. And if once the new leadership comes in Federal Bank, and if Mr. Manian is one of them, if it's very speculative right now, you could see further re-rating there as well.
All right, so that's HDFC Federal Bank, but it's time to wrap up. Thank you so much, Aditya. Thank you so much, Gurmeet, for speaking with us today on what is definitely a fabulous Friday, and that's how markets are really closing down as we look at it. 24,500 maintained, stable as of now. Nifty off its day's highs, but we'll have to wait and see whether you're ending up closing at 24,500 or not. Let's pull up the advanced decline ratio and look at what kind of a day this has been. And yes, it's all about TCS, admittedly, but even so, the market breadth has turned negative through the day. So the broader market's not nearly at the same pace. We'll pull up the heat map right now and just take a look at what's happening there. And you should have no surprises on your entire top row, from a TCS, Wipro, Infi, HCLTech, Tech Mahindra, LTI, Mindtree. All your first 6 gainers over there on the Nifty are from the tech pack. Now, you can debate till the cows come home whether TCS really has seen that strong a number or not, but nevertheless the market seems convinced. On the losing side, Asian Paints, Maruti and Divi's, they're feeling the heat. So consumption not doing too well today. Broadly though, you are seeing that IT kind of a frenzy across the board. So I'm just going to pull up the Nifty IT before Hersh comes in for the broader markets and look at the components over there of the Nifty IT. The entire story of the market can be seen in that one chart, and across the board, Coforge, emphasis, persistent. It's not just about a TCS today, and that really is the story, isn't it, Hersh? IT surprising on the positive, and the hope that what we've seen with the big one, TCS, pulling through. But apart from that, I would say the broader markets really haven't felt that kind of joy as TCS has, and completely flat in negative territory on the Midcap 100.
Yeah, absolutely. And I think it's also a lot of the commentary that's been coming through as to how broader markets have moved higher and how valuations kind of have run away, especially on the broader end of the spectrum.
I think whoever's talking about valuations right now doesn't know where that story starts and where it ends. So that's a different one. I mean, I really don't know. Look at how IT has caught up today, and where do the valuations stand there? Just like Gurmeet was saying a short while ago.
Yes, but yes, so we've not seen that kind of a move in IT over the last 12 months versus a small and mid cap, where the index itself has run up 50 to 60%, and likely that seems to be weighing in, because that is what a lot of market analysts are speaking about, and that's probably what's weighed on at least the indices today, because that's where broader markets have closed today. So that's largely the
Okay.
the
Let's take a look at the
perspective.
weekly charts. Let's take a look at the weekly charts right now and how you have ended the week. And it's all about today. The spike today is what has lifted up the Nifty. Not bad, just about a percent odd on the week. The bank Nifty not done that well, 0.5% down. I want to pull up the Sensex as well before we get to the mid-caps. Mid-caps have been completely flat, even Steven. Maybe they'll pick up in the next couple of weeks. Sensex also about 1% up. But Nifty IT, let's pull up the Nifty IT for the week and see what's happening there. And that has been the big winner. That Friday, complete push-up coming in. So just let's pull up the BSE 500 before we wrap up the show for the week, just to tell you what's been happening in the broader markets and what your top gainers and losers are. And this is interesting. The Sonata Soft, 11%. I was talking about the tech sort of boom going through. Oil India, on a back of a brokerage note, was up 8%. Z Entertainment, they're going to plan to raise funds, or their board will approve their fundraising plan on Tuesday, so that's 6% up. On the other side, you have seen real estate feeling a bit of the pain, and macro tech is up there telling you what's happening. But that's really all the time we have this afternoon on India Market Close. So from Hersh, me, and the entire team that put the show together, thank you so much for watching.